Let's bring in CNBC contributor and iFi AI CEO Ron Ansana here on set with us, along with Rebecca Walser, who is president of Walser Wealth Management, just for a little bit more discussion about what we've seen today. Top of the hour, Ron, we had kind of a feisty chat with Dan and Ali about whether what we're witnessing today in particular is worth freaking out about, if I may, or not. The fact that the dollar's down and that the long bond yields are up. Look at what we just learned about the deficit, the discussion we were just having about salt. You know how expensive that would be. So are there still reverberations from tariffs? Or to the other notes that we've been seeing today, is the dust going to settle and people realize, hey, we just learned this morning, CPI fell last month. We had 228,000 jobs and the economy will be just fine. Well,
CPI fell pre-tariff, really, for all intents and purposes. So that hasn't really been factored into the future inflation that may occur as a result of tariffs. I don't think we're out of the woods quite yet. I mean, we were down 2,000 points at one juncture today. I'm almost giving back two-thirds of yesterday's gains. So I think when you look at the tariffs overall, still the effective tariff rate, even with the rollback of the reciprocal tariffs, is higher than it's been in decades. And in some cases, if you factor in China, apparently higher than it's been in a century. So I don't think we're out of the woods. I also think the market's underpricing some of the other changes yet to come, not just on the budget front, but geopolitical realignment, military realignments, and things like that are all part of the Trump administration's future policy plans. So I think the markets haven't fully priced those in either, because they could lead to unintended consequences as well.
Yeah, I guess the question, Rebecca, everyone's trying to answer is, where does this go, right? And I know Ron's done the same, and Kelly, I was reporting during the internet boom and bust, the great financial crisis, subprime, 9/11, all those things. This doesn't feel like that. This feels like we have the ability to kind of control the outcome. What do you think is going to happen?
I mean, it's a good point. I agree with you. We've seen, obviously, consternations and you know, fourth industrial revolution is really kind of where we're at the edge of and beginning. So I do think this is a big sea change. I agree 100% with Ron. There's a lot of geopolitical and macroeconomic realignments that are happening globally, and that will absolutely have an impact on the U.S. stock market this year, especially as we implement Trump policy. Absolutely.
Rebecca, what moves are you making right now, if any?
Yeah, I mean, we do have a couple buys. We do like, you know, if you're really concerned about tariffs, you could look at like an Alibaba, because that's very established inside of China and the Middle East, even in Europe. And obviously that would be potentially circumventing U.S. tariff policy. We also do like Merck. They just built a $1 billion facility in North Carolina. And we think that if Trump goes after tariff policy or pharmaceutical policy with tariffs, which he said he will do, that it will be a great big production facility for Merck. So we like that. And we still like the dollar stores, because if we do get consumers, like University of Michigan consumer sentiment still lower 3 months in a row, then we know consumers are going to be looking at dollar store alternatives, even to Walmart. So look at Dollar General. If you're looking for some short-term discounted price action, we're really looking at things that will do well if the tariff policy continues as it's been so volatile.
Yeah, Ron?
Well, since I work for an AI fintech, I don't make individual stock recommendations. We have a vehicle that does that.
If AI is so smart, what moves is AI making right now with all of this?
Well, I think our S&P forecast for the next month is up 5%. So, yeah. And now, having said that, admittedly, we missed the downturn a little bit, but it happened so swiftly and so severely that that's going to happen that you don't have the type of anticipatory news, and you're reacting rather than anticipating at this juncture, as we saw yesterday, right? You can't catch that upside no matter what, because it happened in the middle of the day, and it's just an unexpected outcome. So, look, I think, you know, from the human intelligence side, I don't think volatility is going to slow down. I think we'll see more vol. It may not be as dramatic as what we've seen in the last couple of days, where, you know, you're getting a 12% move in the NASDAQ. Which
these are market moves. These are internal things that I don't want to, you know, that bore the audience with.
Well, I mean, listen, I covered the 1987 stock market crash, and we were down almost 23%. And, you know.
And what people forget about that, and I want to remind, we'll say goodbye, is that the year ended higher.
Nominally so.
88 was a great year.
No recession.
Recession came in 89.
Yeah, but 88 was a good year.
It was a good year.
1980, I sound like Biff from Death of a Salesman. 1988 was a very
Back
good
year. Back to the future.
Rebecca Walser, Ron Ansana, thank you both very much.
Really appreciate it. Really crazy couple of days.